Hello, friends. Chris Kelly here. That time of the week. And as always, I wanted to talk a little bit about market stats. In fact, today I wanted to talk a little bit more about market stats. And by that, I just mean get a little bit more in depth. I don't want to get weirdly into the weeds, but I just thought it good to look at some data. We just got the May inventory numbers, or we call it a market action report through the multiple listing service. So we'll take a peek at that as well. So I'm going to start here with this guy. Let me minimize the screen. There we go. The one we look at every week. Inventory up quite a bit. That's good. I can't remember where we were last week exactly, but it was a lot lower than that. If I'm not mistaken, it started with a, here, I'm going to pull it up really quick. It started with a 5, if I'm not mistaken. So quite a bit more inventory. And you can see it here. I mean, it went up 29% from this time last week. So that's marvelous. Pending sales off a little bit, but not dramatic from this time last week. And we're still low on the solds. Median and average sales price, it continues to bump along, but overall has been climbing again. Again, this time last year, 590 on 578K. So that's about, what is that? Under 3%, 2.5%. So a pretty nominal difference. What it says is we're catching up again to our peak last year. So we kind of had a dip, and then last year we had a dip last year, and now we've been increasing and catching up. So just for comparative purposes, here is the same week in 2022. I know it kind of shows it a little bit on the last screen, but more listing inventory by a good clip than we have this time, this year. Pending sales, not dramatically different. I think they're 477 this week. And solds were up about 100 over last year versus this year. But there was the median for that particular week. If you took that particular week's median versus this particular week's median, it's about 3.5%. So somewhere between 2.5% and 3.5% is the difference in price. Now, the RMLS, I'm going to flip over to this graphic. The RMLS does a pretty nice market action report. They've actually improved it quite a bit this year. But right here, average and median prices, comparing 22. This is through May, so that's year-to-date numbers, which is really arguably a better way to look at it. I mean, I look at a snapshot because I do it every week, but the year-to-date numbers, they are, you can see, about 4.5%. But what that shows when you look at the year-to-date versus the snapshot of May is that prices are obviously increasing because the difference is only 2.5% to 3.5% versus 4.5% off, which means pricing's moving up, catching where we were this time last year. That's the long and short of it. Inventory. This is something I talk about pretty much every month because this document comes out pretty much every month. So May's inventory still, painfully low. We've been at 1.9 now for a couple of months, and you can see that's largely where we've lived this year. January is historically a slower month. That's not unusual. These last couple of years were just ridiculous anomalies. So, really stupid low inventory. And that problem isn't likely to change anytime soon. Total market time, though, it's still low. On our document, let me go back to the 23 one. On our document, we're still at 8 days median, a little over a month on average. So, that's fast. It's faster than it was in 20. It's faster than it was in 2019. These anomaly years were still a little bit faster, but not dramatically. So, all in all, I would say the market's still clipping along, and it's doing okay. I mean, we listed 2 properties last week at the end of the week, and I've already pended them both with multiple offers. We actually listed 3, and one of them is likely to go together before the week's up with multiple offers. So that is happening. I'm not going to say it happens all the time because it doesn't, but it is happening. Like I said, there's just not a license to be wrong. And if you find that you are, it's really incumbent on you as a seller to get right and do it sooner rather than later, if possible. So when you look at the data, I look at a lot of data sets and a lot of sets of comp data, and you see, these houses that were priced aggressively bid up, and that still happens. I just looked at a data set today, and in Clackamas, Happy Valley, and there was definitely some property in there that bid up and over the list price. And they were priced fairly aggressively. It wasn't like they were pushing the envelope and they got up and over. But my point is if it's priced aggressively or the adjustments are made quickly enough, things are still moving at a really good clip. So I think that's probably all I want to speak to with regards to stats. Let me minimize and get back. Oh, yeah. So there's a that's pretty much a summary of that. There's an article in Forbes this week that I'm gonna link. These articles are a little bit redundant at times, but it does support everything that I've been saying. Part of it is the housing inventory outlook, and part of it is, will the market crash? If not, why? And it basically says all the things that we've been talking about. No, it's not likely to crash. In fact, it's not going to. So it's not likely to crash for all the reasons we've talked about. Inventory numbers are too low. There's nothing, we had the nonsense that was the debt ceiling thing. That's come and gone. Interest rates have come back down as a result of it. Not dramatically, but they've come back down. And ultimately, that will continue. Again, like I said last week, unfortunately, there were a lot of jobs created, more than anticipated. I shouldn't say it that way, but the result on keeping inflation at a stingy high number, the result is that. And so is it possible that the Fed's going to crank the rates up another notch? Yes, it's possible. Nobody knows for sure. We'll find out here in about a week. And we'll find out exactly what that has, what influence that has on long-term interest rates, mortgage rates. One is not identical to they're not exactly the same as the other. So it isn't always the case that a Fed rate hike turns into some definitive mortgage rate hike. So we'll see where that goes. Anyway, I hope summer's treating you and yours well. And as I always say, till the next time.